This is not a drill. Stop refreshing your portfolio. Stop watching the ticker. Stop listening to the talking heads on financial television telling you everything is fine. What I am about to show you is not a rumor. It is not speculation. It is not a theory. It is happening right now, in real time, across every major bullion dealer in the Western world. They have pulled it. They have quietly, without announcement, without fanfare, without a single press release, removed silver from their shelves. The add to cart buttons are disappearing. The inventory counters are hitting zero. The phone lines are going to voicemail, and nobody is talking about it. Today, we are going to expose the silent inventory crisis that is about to trigger the largest price dislocation in precious metals history. This is finance monopoly. And what happens next will determine whether you retire wealthy or whether you spend the next decade asking yourself why you didn't act when the signs were screaming at you. Let's get into it. For those of you who have been with this channel from the beginning, you already know the game. You already understand that the price you see on your screen is not the price you pay at the counter. You already understand that there are two markets operating simultaneously: the paper casino in New York and the physical reality in your local coin shop. We have been called crazy. We have been called doom and gloomers. We have been told that silver is a boomer metal with no future. We have been mocked in the comment sections of mainstream finance channels. They told us to buy tech stocks. They told us to buy Bitcoin. They told us that physical assets were relics of a bygone era. But here we are. We are standing at the edge of the cliff, looking down at the wreckage of the paper market. And we are the ones with the lifeboats. We are the ones who stacked when stacking was boring. We are the ones who paid the premiums when premiums seemed ridiculous. We are the ones who trusted the fundamentals over the fantasy. And today, the fundamentals are screaming. The dealers are out. The vaults are draining. The shelves are empty. And the mainstream financial media is completely, utterly, suspiciously silent. Let me show you what they don't want you to see. I want you to do something right now. I want you to pause this video, open a new tab. Go to your favorite online bullion dealer. I don't care which one. Go to SD Bullion. Go to JM Bullion. Go to APMEX. Go to Silver Gold Bull. Go to Monument Metals. Now search for Silver Eagles. Search for 10-ounce bars. Search for 100-ounce bars. Search for monster boxes. What do you see? You see the words that should terrify every investor on the planet. Out of stock? Pre-order only. Temporarily unavailable. Ships in 4 to 6 weeks. Limit 5 per customer. This is not normal. This is not a holiday backlog. This is not a minor supply chain hiccup. This is a structural failure of the physical silver market. Let me give you the specific data because I know you want the receipts. As of this recording, SD Bullion has 0 American Silver Eagles available for immediate delivery. 0. The most popular silver coin in the world, produced by the United States Mint, backed by the full faith and credit of the US government, and you cannot buy one. JM Bullion is showing wait times of 3 to 4 weeks on generic rounds. Generic rounds. These are the most basic, most commoditized silver products in existence. They should be stacked to the ceiling. They should be available by the tube, by the box, by the pallet. Instead, you're waiting a month. APMEX, one of the largest dealers in North America, has implemented strict purchase limits on almost every silver product. You cannot buy more than 20 ounces of certain items. They are rationing silver like it's wartime. Because it is wartime. And here's the detail that should make your blood run cold. The premiums. In a normal market, the premium over spot price for a Silver Eagle is $3 to $4. Right now, if you can even find one, you're paying $12 to $15 over spot. That is a 300% increase in premiums. That is the market screaming at you that the spot price is a lie. But wait, it gets worse. I spoke to 3 different local coin shop owners this week. Off the record, no cameras. Just honest conversation between people who understand what's happening. You know what they told me? They told me they're getting calls from customers offering to pay 20% over their listed prices just to secure inventory. They told me they're getting calls from other dealers, competitors, asking if they have any silver to sell wholesale. Dealers buying from dealers. That's not a market. That's a scramble. That's a panic. One dealer told me, and I quote, "I've been in this business for 30 years. I have never seen demand like this with supply like this. Something is very, very wrong. Something is very, very wrong." So where is the silver going? If the dealers are out, if the coin shops are empty, if the mints are backed up, where's all the metal? The answer is the same answer it's been for the last 3 years. East, the silver is going east. Let's talk about the COMEX, the Commodities Exchange, the place where the paper price of silver is determined, the casino floor where banks trade millions of ounces on screens without ever touching a single bar. The registered inventory at the COMEX, the silver that is actually available for delivery, has collapsed. We are looking at numbers we haven't seen in decades. As of this week, registered silver stands at approximately 30 million ounces. 30 million ounces. Let me put that in perspective for you. Global industrial demand for silver is approximately 600 million ounces per year. That means the entire registered inventory of the COMEX, the foundation upon which the global paper price is set, represents about 18 days of industrial consumption. 18 days. If the industrial users of the world, the solar panel manufacturers, the electronics companies, the medical device makers, if they decided to take delivery instead of rolling their contracts, the COMEX would be drained in less than 3 weeks. But it's not just the COMEX. The London Bullion Market Association, the LBMA, has been bleeding metal for months. The vaults in London, the supposed Fort Knox of the silver world, have seen consistent outflows. The silver is leaving London on planes and ships, heading to refineries in Switzerland, and then continuing its journey to Shanghai, to Mumbai, to Singapore. The East is not buying paper. The East is buying metal. Real, physical, hold-in-your-hand metal. And they are paying whatever premium is necessary to secure it. China alone has imported more silver in the last 12 months than in any period in recorded history. The Shanghai Futures Exchange is seeing delivery demands that dwarf anything happening in New York. And unlike the COMEX, where 99% of contracts are settled in cash, the Chinese are standing for delivery. They want the bars, they want the metal, they want the real thing. And every ounce that goes east is an ounce that is not available for your coin shop. Every ounce that gets melted into a solar panel is an ounce that will never become a silver eagle. Every ounce that disappears into a Chinese vault is an ounce that is gone forever from the Western supply chain. This is the drain. This is the slow-motion bank run that the mainstream media refuses to cover. This is the greatest wealth transfer in modern history, happening in plain sight, hidden only by the fog of financial jargon and the deliberate misdirection of the paper markets. Now, I know what some of you are thinking. If silver is so scarce, if demand is so high, if the dealers are out of stock, why isn't the price skyrocketing? Why is the spot price still hovering where it is? Why aren't we at $100 already? This is the question that separates the novice from the expert. This is the question that reveals whether you understand how this market actually works. The price you see on your screen is not determined by supply and demand of physical metal. It is determined by supply and demand of paper contracts. And paper can be printed infinitely. Let me explain the mechanism, because once you see it, you cannot unsee it. The big banks, the bullion banks, the swap dealers, they have the ability to create silver contracts out of thin air. They sell these contracts on the COMEX, creating artificial supply in the market. When there is more supply, the price goes down. It's basic economics, except the supply is fake. These are called naked shorts. They are selling silver they do not have, silver they have never seen, silver that may not even exist, in order to suppress the price and manage their existing short positions. The latest bank participation report shows that the 4 largest banks hold a combined short position of over 300 million ounces. 300 million ounces. That is 10 times the entire registered inventory of the COMEX. They have sold 10 times more silver than actually exists in the deliverable stockpile. In any other market, this would be called fraud. In the silver market, it's called business as usual. But here's the trap they're caught in. Every contract they sell is a promise to deliver. And increasingly, the buyers on the other side of that trade are not speculators who will cash settle. They are industrial users who need the metal. They are sovereign wealth funds accumulating hard assets. They are Chinese entities with unlimited yuan and a strategic mandate to secure resources. These buyers are calling the bluff. They are standing for delivery. They are saying, we don't want your dollars. We don't want your cash settlement. We want the silver. Put the bars on the loading dock. And when the bars aren't there, when the vault is empty, when the promise cannot be kept, that's when the system breaks. That's when the paper price becomes meaningless. That's when the physical price detaches and goes vertical. We are watching this happen in slow motion. The dealer shortages you're seeing right now are not a glitch. They are the first cracks in the dam. The water is starting to seep through. And when the dam breaks, the flood will be instantaneous. But let's say you don't believe me about the financial manipulation. Let's say you think the COMEX is fine, the banks are solvent, and the paper market will continue functioning indefinitely. Fine. Let's talk about something that cannot be manipulated. Let's talk about physics. Let's talk about industrial demand. Silver is not just a monetary metal. It is not just a shiny collectible for stackers and preppers. Silver is the most electrically conductive, thermally conductive, and reflective element on the periodic table. It is irreplaceable in hundreds of industrial applications. And the single largest consumer of silver on the planet right now is the solar industry. Every solar panel requires silver. The average panel uses about 20 grams. As the world races to meet renewable energy targets, as governments pour trillions into green infrastructure, as solar installations grow by 30% to 40% per year, the demand for silver is exploding. The Silver Institute projects that solar demand alone will consume over 200 million ounces this year. That is 25% of total global mine supply going to a single industry. And that number is growing every year. But here's the problem. The supply isn't growing. Global silver mine production has been flat to declining for the past decade. We are not discovering new major silver deposits. The existing mines are seeing grade degradation, meaning they have to process more rock to get the same amount of silver. Energy costs are rising, labor costs are rising, regulatory burdens are increasing. The all-in sustaining cost to produce an ounce of silver has risen dramatically. Many primary silver miners are barely profitable at current prices. They cannot afford to expand. They cannot afford to explore. They are running on fumes. And remember, 70% of silver production is a byproduct. It comes out of the ground when you're mining for copper, lead, or zinc. If base metal prices fall, if miners cut production, silver supply falls with it regardless of silver demand. We are heading into a structural deficit. Demand is rising. Supply is stagnant or falling. And the above-ground stockpiles, the buffers that used to cushion these imbalances, are being drained. The solar industry alone could consume the entire remaining inventory of the COMEX in a matter of months. Add investment demand, add monetary demand, add jewelry and silverware, add the military and aerospace applications, add the medical industry. There is not enough silver. There's not enough silver being mined. There's not enough silver in the vaults. There's not enough silver on the dealer shelves. And still, the paper price sits there, pretending. So what does it mean when the dealers go dark? What is the signal hidden in the empty shelves and the out-of-stock notices? The signal is that the market is bifurcating. The paper market and the physical market are becoming two separate entities. And historically, whenever this happens, the paper market loses. Think about what a dealer shortage actually represents. It means that at the current price, there are more buyers than sellers. It means that the price is too low to balance supply and demand. In a free market, the price would rise until sellers appeared. But in the manipulated silver market, the price is held down while the physical inventory disappears. This is not sustainable. This is a spring being compressed. The more you push it down, the more violent the release. We saw this happen in 2020. When the pandemic hit, the paper price crashed to $12. But could you buy silver at $12? Absolutely not. The dealers were sold out. The premiums exploded to $10, $15, $20 over spot. The real price was $25 to $30, while the screen said $12. We saw it happen in 2021 during the silver squeeze movement. Retail investors tried to drain the COMEX. The paper price barely moved, but the physical market went haywire. Dealer inventories vanished. Wait times stretched to months. Premiums hit all-time highs. And now it's happening again. Except this time, it's not just retail. This time, it's industrial users. This time, it's sovereign nations. This time, the buyers have deeper pockets and longer time horizons. This time, they're not going away. The dealer shortage is the canary in the coal mine. It is the smoke before the fire. It is the tremor before the earthquake. And here's what the smart money is doing. They are not waiting for the price to confirm what the shelves are already telling them. They are buying now at whatever premium is necessary because they understand that availability is more important than price. What good is a low spot price if there is no metal to buy? What good is waiting for a dip if the dip comes with a sold out sign? The wealthy, the institutions, the nations, they are accumulating. They are securing supply. They are locking in metal before the window closes. The question is, let me paint you a picture of what happens next. Because this is not speculation. This is pattern recognition. This is history rhyming. First, the dealer shortages become chronic. Not just a week here and there, but months of empty shelves. The mints start rationing allocations. The premiums become permanent, baked into the real price of physical metal. Second, the COMEX registered inventory crosses a critical threshold. We are already at multi-decade lows. When it drops below 20 million ounces, when it approaches single digits, the alarm bells will be impossible to ignore. The commercial traders, the ones who actually need the metal, will panic. Third, a delivery failure. Someone stands for delivery. They demand their bars. And the bars are not there. The COMEX offers cash settlement at a premium. The buyer refuses. They want the metal. The exchange is forced to go into the market and buy physical silver at any price to fulfill the contract. This is the match that lights the fuse. Once there is a confirmed delivery failure, the paper market loses all credibility. Every other contract holder looks at their position and thinks, wait, can I actually get my silver? The rush for the exits begins. Everyone tries to take delivery at once, but there is no silver. The price gaps up. Not 5%, not 10%. It gaps up 50% overnight. Then another 30% the next day. The shorts are obliterated. The banks face margin calls they cannot meet. The paper market either shuts down entirely or becomes irrelevant. And what remains is the physical market, the real market. The market where you and I have been stacking for years. In that market, the price is not 30. It is not 50. It is whatever the seller demands and the buyer is willing to pay. In that market, your stack becomes your bank account. Your silver becomes your leverage. Your foresight becomes your fortune. This is not fantasy. This is the inevitable conclusion of a system built on lies, leverage, and the assumption that the music would never stop. So here is my warning to you. Here is the message I need you to take away from this video. Do not wait for confirmation. Do not wait for the mainstream media to tell you it's time to buy. By the time CNBC is running segments on the silver shortage, it will be too late. The shelves will be empty. The premiums will be astronomical. The opportunity will be gone. The dealer shortages you are seeing right now are not a problem. They are a signal. They are the market telling you, in the clearest possible terms, that the current price is wrong. They are the market telling you that demand is overwhelming supply. They are the market telling you that the people who understand what's coming are already acting. If you can find silver, if you can find a dealer with inventory, if you can find a local shop with metal on the shelf, buy it. I don't care about the premium. The premium is the real price. The spot price is the lie. Pay the premium, secure the metal. Sleep well at night knowing you own something real. And if you already have a stack, hold it. Do not let the paper price fluctuations shake you out. Do not let the banks convince you to sell your metal back into their system. They need your silver more than you need their dollars. Every ounce you hold is an ounce they cannot use to cover their shorts. Every ounce you hold is a vote against their manipulation. We are in the endgame now. The fundamentals are undeniable. The inventory is collapsing. The demand is surging. This is finance monopoly. We don't deal in hopium. We don't deal in hype. We deal in reality. And the reality is that the silver market is breaking. The dealers are out. The vaults are draining. The East is buying. The shorts are trapped. The price is a lie. And those of us who see it, those of us who act on it, those of us who have the courage to trust the fundamentals over the fiction, we are going to be on the right side of history. The shelves are empty. The signal is clear. The window is closing. You know what to do. Stack, hold, win. This is Finance Monopoly. I'll see you in the next one. If this video opened your eyes, smash that subscribe button. Hit the notification bell. Share this with someone who still thinks the paper price is real. The information war is just as important as the financial war. Every view, every share, every comment helps break through the media blackout. Stay vigilant, stay stacked,